Hey guys, Daniel here. So in this video, we're going to go over Warren Buffett's portfolio, some changes that we noticed, and let's get right into it. So here we can see one of the major changes on the previous quarter when it was reported was his change in terms of Apple. So Apple previously represented about 50% of his portfolio. He cut way back. He cut back 50%, sold over, I think, like 400 million shares, which is crazy if you think about it. And now Apple is down to representing 30% of his portfolio. I mean, part of this has to do with the fact that Apple right now is quite expensive. If we look at the 5-year chart, we can see, he's made just a crazy amount of money basically on it, and I think it's completely acceptable when it represents, 50% of your portfolio to say, look, let's take our gains and let's put it into something else that we think is going to outperform. And so that's likely his thought process when it comes to that. Some other interesting things when it comes to his portfolios, he's added 2 new positions here. He's added Ulta Beauty and Heiko, which is like an aerospace and defense company. Ulta Beauty is like a beauty retailer basically. Both of them, but especially Ulta Beauty, is quite well priced right now, I would say. And if I were in his position managing a portfolio of this size, Ulta Beauty would definitely be very appealing to me as an investor, a small retail investor. It's not appealing because, it's trading at what I would consider a reasonable price, but there's definitely better opportunities for retail investors in buying Ulta Beauty, in my opinion. But from if I was managing his portfolio, I would definitely say, yeah, let's buy Ulta Beauty because there's not much else that's that cheap, that's that okay of a company basically. It's not like a fantastic company, it's a good company, and for it to be selling at whatever it's selling now, like 14 times, 15 times earnings, it's pretty reasonable given the current market environment. So that's Ulta Beauty, that's Heiko. Both of them are kind of common sense. If you take a look at them, it's completely understandable why he would buy these securities. And if you watch my video on ATD and why I think it's not necessarily a great buy for retail investors, but a good buy for someone like Warren Buffett or someone managing a billion, 10 billion plus in terms of capital, the same situation applies here basically. Ulta Beauty and Heiko are good buys for someone like Warren Buffett, probably not the best for someone who's a retail investor. Uh, so, and then some other things here, like, Oxy basically, and Liberty, Sirius, just typical. He's adding to these positions over time. The interesting thing is, his portfolio is so big that if you look at something like a new buy in terms of Ulta, he's buying 600 or 700,000 shares basically, but it represents such a minuscule part of his portfolio that it basically leaves no impact, right? We're talking about 0.1%, not 1%, but 0.1% of his portfolio basically being in Ulta Beauty, where 30% of his portfolio is in Apple, right? And if we go back historically, back a few quarters, we can see that in terms of Apple, his portfolio was, his portfolio in terms of Apple was his concentration was, like I say, close to 50%. So, most of Berkshire's equity portfolio right now is in Apple. And it reaches a point where, there's going to be better ideas out there that he can pursue. I mean, if we look at Apple, basically, in terms of its current valuation, it's probably trading around or just above its fair value. I would say above its fair value. So, it's a great company, but there's probably other places he can put that money in and make decent returns. The issue is when you're dealing with a portfolio his size, it's very difficult. There's very few opportunities out there. Like I say, Ulta Beauty, as a retail investor, doesn't make any sense. But for someone like Warren, or the people who are helping him basically run Berkshire, it makes sense that they can throw $1 billion towards it. But still, in terms of their entire equity portfolio, it's not going to make any substantial difference just because of the size of their portfolio. So he's in a bit of a bind for sure, and he's been in this bind for a long time. The problem is he has too much money and doesn't have any opportunity to basically put it anywhere. Even his purchases of things like Oxy and primarily Oxy's, it has mostly to do with, like, it may not be the best investment for, obviously, for a retail investor, but for someone like him, it makes total sense because there's nowhere else for him to throw his money at. He needs holes he can throw his money into and not lose it, basically, at this point. Because it's very difficult to find good investment ideas when you're dealing with a portfolio of like $300 billion. Like, to make any sort of substantial dent, you got to put like 30 billion in towards something. That's greater than the market cap of the majority of these companies. Like, when we're talking about Ulta Beauty, it's literally twice. To make a dent, he has to buy twice the market cap of something like Ulta Beauty to make any dent in his portfolio. So, that's why when we review his portfolio, we're like, okay, what changes did he make? Well, he sold a huge amount of Apple and hasn't put it back into equities because he can't. There's nothing for him to put it into that's going to make a dent, basically, at this point, right? If we look at, for example, his activity, you know, he's bought Alta, he's bought Heiko, he's put a bunch of money into Siri and other sort of Liberty groups, but which is an arbitrage play if you know that situation. But there's not much else because he can't. There's nowhere for him to basically put the money at this point, if that makes sense. So that's something to keep in mind. Like, because if you look at his portfolio, let's say he decides he's going to cut Apple another half, right? Then he's going to have like 40 billion, let's say, to throw around. Well, what's he going to put it into? Like, there's not much out there that he can throw that capital, deploy it towards that's at a good price. I mean, he can put it into things, but it's not going to probably be above market returns, if that makes sense, at this point, because it's grown too big. So that's the issue that he's dealing with. Like, even if you look at like these positions here, right? Like Ulta Beauty, okay, he threw 250 million towards it. That sounds great, but in reality, I mean, that's like literally a drop in the bucket. It's not going to make a difference. So something to keep in mind. When you're dealing with a portfolio this size, it's completely irrelevant almost towards retail investors because he has so much money basically to throw at things. Like I say, his job, or their job right now when managing this money is basically to throw it in a hole that's not going to light on fire because there's nowhere to put it to make a big enough dent when you're managing something like 300 billion. 30 billion, you can still do good. Even 50 billion, but 300 billion is ridiculous. It would be, like I say, it'd be very hard to manage. Which is why I wouldn't be surprised in situations like Ulta Beauty where you got like a pretty good company, I think, based off of what I read, selling at like a reasonable price. I wouldn't be surprised at them just buying it all because there's just not that many more opportunities at this point, especially in the current market conditions with the amount of money that they're dealing with. I think from his perspective too, and their perspective, they've never really encountered this situation because like in the past when things were like so hot and overvalued, their portfolio was like maybe a quarter or a fifth of this size or even a tenth. So even though a lot of things are overvalued, they can still look into slightly smaller spaces and find things to invest in. Now that they're dealing with 300 billion and the market's overheated, like good luck finding something. Like, it's going to be extremely difficult, if not impossible. So um, those are the major changes. Cutting back on Apple, buying some new positions here in Ulta and Heiko. I mean, like it's basically just cutting back on that Apple position, and then struggling to find, places to throw the money into. And that's also why I think they've held on to this Apple position for so long. It's not so much that they believed it was going to go up like crazy, but more so that there's nowhere else to put the money, right? So that's something to keep in mind. That's my observation of this portfolio. I mean, it's obviously fantastic. You're talking about the best investor in the world, but clearly they're struggling to find things to allocate capital towards just because the size of their portfolio and the current market conditions. So that's my takeaway. I hope you enjoyed the video. Be sure to subscribe if you haven't. Be sure to like, and if you have any questions, comments, be sure to leave a comment down below. Thanks.